Has inflation disappeared? Hello, ladies and gentlemen, and welcome back to the Daily Show where we discuss stocks, commodities, and cryptos. Today, we talk about the inflation numbers that showed us that there was some improvements for the US economy. In particular, food and beverages were right down in inflation, though shelter still remains sticky. We'll also be talking about some of the markets and the breakouts that just occurred. We've talked about the 4,530 level many times for the S&P 500, and it looks like we could be on our way there before finding too many troubles. But it was more interesting to take a look at one of our most important charts this week. The yield started dropping and the market started booming. But there was actually one market that was a little bit better, and that was gold. Has the shiny metal made a resurgence? Let's talk about it right now together. Well, welcome back, everybody, to the Daily Show where we always discuss macro, leading indicators, and of course the hottest charts. If it's your first time here and you love markets, subscribe to the channel, smash that like button, and of course we've got a lot to cover together. So it was a pretty good day for big tech. In particular, we saw semiconductors do well, Microsoft and Apple had a bit of a resurgence, and we also saw Meta doing quite well, 3.7%. But it wasn't just there. Utilities also were finding some strength, and we'll talk about that later on today's video. But let's begin with the seasonal data. Everybody likes to know some good stats, and of course, we've had an absolute rampant year so far. Over 20% up from the lows on the NASDAQ. What does that mean for the rest of July? And more importantly, Q3 and Q4? Well, it all comes down to being able to actually select the right information. And of course, we've done that over on our Twitter. Follow at FX Evolution. Links in the description down below if you're interested. And we've shared over here our thoughts on pre-election years. So if you look at this chart, you'd think, wow, this is literally the exact same type of thing. We've actually seen a market that's increased, it's decreased during the right times or started to go sideways. And we've even seen the little blips that have meant to have happened the week after OPEX, also the period over here. And of course, we know that now we come to the biggest difficulty of the month, the middle of July into Q3 earnings. This is where the markets will make their decision whether they really want to boost up or whether they want to see the decline that tends to happen that runs through the weakest period of the months of the year, the next 2 to 3 months. So data aside, what other things do we have going on? Remember, the NASDAQ is getting a special rebalance. This is effective of July 24th, and it sent a little bit of shockwaves through, I think, some of the biggest tech stocks that was up to the last 24 hours of trade. For investors that have been watching the channel or you're new here and you're an investor, do keep in mind that forward PE is starting to get close to one standard deviation. So it's something that we're just looking at in these markets, but it's all about this. What is going to happen to the forward PE once we see earnings, which starts this Thursday with the big banks, then leads into the big tech stocks as of the week of July 24th. And if you study that chart, you'll notice that over this period of time is often where we start to see the troubles in the markets. So we might have a little bit of a ramp up before that starts to occur. We also know that the Fed has been continuing to kind of support the markets with its secret BTFPs. We talked about that in the previous video. If we start to see this decline, that could be another bit of a warning sign. Of course, we'll update you here on the channel should that occur. So what else do we know post-inflation? Well, the post-inflation report, we know that shelter was sticky, and we also pretty much still have an absolute, almost guarantee, you would say, for a July rate hike. That is according to the market. But September became very different. We dropped from basically being at about 29, 25%, all the way down to only 13% chance of a rate hike now in September. So is this the end of rate hikes? Well, the market's starting to consider that as a real possibility. Here are some more stats that are interesting for the middle of the month if you want to pause the video and check it out here. But let's jump over to options rotation and then, of course, the actual market itself for the charts that we want to be watching. Here are some of the things that we've seen so far. There were some pretty big volume trades, I would say, going through on inflation day. It makes sense. We had a resurgence in things like Rivian. We also had a resurgence in other stocks like NEO and a few others that we talked about. They're getting that sympathy run thanks to Tesla's move the other day. We have also hyper stocks, PayPal, Zoom, DocuSign, all of these ones, SE, all of these ones from 2021. They're starting to base off and see a bit of a resurgence along with the Russell 2000. So is this where we have to start looking at stocks in the market? Let's go down here and you'll notice that still we're sitting almost 60% on calls and 43 versus a normal 39 million. So a pretty large step up in overall volume during the CPI, and expect this to remain elevated as we enter into the Q3 period. Let's take a look at rotation though. Now this was where the big one came out. Gold was booming. It loves a decrease in yields. Remember, gold is basically the currency. It's the oldest currency in the world, and it really does love a nice lowering interest rate. Well, that's what we had over the last 24 hours. The US 2-year went down and gold boomed up hard. And this could be the beginning of a nice trend for gold, actually. There's a few things we'll be looking at today, and it's got some great technicals on it. So for gold bugs, maybe it's back a little bit. Over the last 5 days, we've also seen defensives remain incredibly lethargic. Utilities, staples, and healthcare not doing well over the last 5 days. However, the last 24 hours and the last 2 days have been amazing for utilities. This was our number one kind of defensive market that we were looking at for that movement through July, and it's starting to find some resurgence. But still, nothing going on in staples or healthcare for now. And until we see those really mount a 3-day or 2 to 3 day kind of rally, we're not really sure that we've got any defensive moves. And it's actually been what's keeping us out of really making huge bearish positionals, because they're just not seeing the rotation from the biggest Wall Street players. So just before we jump into the charts and take a look at all of the hottest levels that you should be watching right now, and there's some really good ones in today's video, I want to say a thank you to the sponsor of today's video, which is Tiger Brokers. Now, if you're from a country where Tiger is currently available, check out the links in the description down below for the special offers. But I want to talk a little bit about platform with you today. As you would know, on this channel, we talk about rotation all the time. And in fact, we may have just seen rotation into 2 major sectors that could be just getting started. But a few days ago, we talked about the idea that oil and gas was on the improve. Since that point, we've seen it jump out, and it's broken out of many different momentum ranges. Whether it's US oil, energy sector, or even specific stocks, you can come into the platform and see this in heat maps over that period of time. You can also then drill down on particular different concepts and industries and see some of the biggest stocks. You can then sort them by market capitalization, movement over the last couple of periods, and all sorts of things. I particularly like selecting 5-day to see what people have been moving into and what they haven't, and then checking out the heat map as well, where we can select the top 50 market caps and then select the ranges. It's one of the different ways that you can start to think about markets. And I believe moving forward, especially through this next decade, it's going to take, to outperform the S&P 500, the ability to be able to rotate through sectors. And that is something that you can do with this platform. Check out the special offers in the links down below, and hopefully there's one that's right for you. So let's jump into these charts and let's get started with the shiny one, which is gold. And it was, ramping up hard. This is the market index, and we actually charted this a little while ago. And we talked about this area being the potential of finding some buyers. Well, it looks like the buyers are there, and I would expect our weekend data report, make sure you subscribe for this, to show us that gold buyers have come in big time. I'm talking the big traders. I'd like to see them showing it up, and if they are, then it could be a sustained trend we're about to see here. Remember, if yields start to drop off, gold will generally do well. And this is something that if it becomes sustained, it's kind of beaten down. In fact, GDX, if you have a look at this on a chart, is well beneath where it should be, considering where gold itself is. Take a look at GDX. Take a look at when gold was last at $2,000 an ounce. Yeah, they don't really compute. So technically, it's underpriced at this stage compared to what we've been seeing when gold really starts ramping. Double bottoms were present here in GDX. They also were present in a couple of the other stocks, and I've got a little bit of a surprise here in just a moment. So let's take a look at actually Barrick for a minute, and you'll notice Barrick has been doing a nice little base. It broke out, and what is that? That is an island reversal. So we saw that really ramp into the opening of the session. Nice movement up 4.61. I'm not saying it doesn't pull back first. That's certainly a possibility. But it looks like it's based, and this is around the right area. If you actually load Barrick out, and this is just one of many gold stocks that are showing the same thing, it's been trading at very low points. In fact, it was pretty much as low as it was in March of 2020. Let's have a look at some of the big volume trades that have been going through recently. And as you can see on this chart, it looks like accumulation to me. Big breakout, huge trades coming through over the last 2 months. Well, Someone's been building a position. Was this the catalyst to push it through? We'll be watching the metal quite closely, as we will also be watching this chart here, which is yields. And we saw a drop in, of course, US 2-year versus US 10-year. Now, often this is considered the calm before the storm. In fact, if we do continue to see US 2-year, 10-year drop off, after it gets underneath inversion, which is the 1%, that's actually when you should be most scared of the market, because that usually means a recession is actually about to be called. But yeah, that's what we're looking at here. And for now, for the gold trade, for metals, for anything to do with energy as well, we're watching this chart very close. The other day we saw energy spike. It spiked due to the acceleration of yields. But as of the last 24 hours ahead of PPI, which could change this, we've basically seen a big drop off in the US 2-year. And that's positive. If that continues, I would expect gold to do relatively well over the next couple of weeks. Let's move over to the rest of the market. What did the biggest stocks do? Well, as we mentioned, Magma is a trade that we've been watching recently, and Magma is Microsoft, Apple, Google, Meta, and Amazon. Yep, very strong, no change of trend. We've been watching it, and it just doesn't show it up as anything other than strong at this stage. RSP also looks quite good. This is the equal weighted index. You can see that we've seen a little bit of rotation into other stocks in recent weeks. Specifically, IWM has found pickup, which is usually a good sign for markets. What about high yield junk bonds? They were flying, but the one that I think is more interesting is treasuries. We talked about how this actually had based and started to turn off. It was almost like there was some insider trading going on. Big volumes coming through the base, and at the same time, we got that island reversal near this level. Then we get the rally in treasuries. Is this finally the bottom for treasuries? Well, I can tell you there's been some large trades that have gone through around these levels. And because there's large trades, along with some of the things that we've started to see, we can go back to treasuries and say, well, if we now breach past 104 in the future, we can pretty much ascertain that there is a large build here and that there is a good chance that the markets have actually bottomed, at least temporarily. So I'm liking treasuries here moving forward from a technical perspective, along with some of the data analysis that we've been doing. Let's move over to the rest of the markets. The VIX is continuing to drop. It fell like a rock, down 9% after the CPI number. PPI will continue to kind of spike it around, which comes out just before the market, of course, over the next 24 hours. But this is an interesting point down here, 12.12. There's actually a gap left on the VIX. And I think there's a stat that's somewhere that says that all gaps have always been filled on the VIX. I think it's like every gap's been filled. So this one still hasn't filled. I think we should be setting alerts for this level in the future. And if that just so happens to coincide with certain levels on the S&P, like 4,530, let's say, or 40 or 50, somewhere around there, well, it might be very interesting to watch on that one. So VIX, I'm certainly on top of it. I think we all are together. Let's move through the skew. No crush. Skew didn't do anything. The black swan indicator hasn't really been giving us any extras. It helped us the other day to kind of ascertain we were probably at the top for the Qs. We sold off to the 20 moving average on the daily, but we haven't done full mean reversion yet. What about the central bank liquidity? Well, the traditional way of looking at it, still very low. Markets are still very, extended, but that doesn't mean it has to turn just yet. We have no price action, and the island finally failed. So you can see here it almost reversed. Basically, we had the gap up, the gap down, the sell-off, no new low on the S&P because the S&P is the better one to use here than the Qs, and then we took the high over the last 24 hours. So, yeah, even another bear kind of area has been busted again, and could that create a bit of a squeeze? I think it could certainly do that towards that 45.30 level on the S&P. Dollar index is getting absolutely crushed. After we saw yields switch, and especially the long tail also start to switch a little bit, it's getting crushed. And I wouldn't be surprised at all to see the dollar underneath 100. We had a feeling once we basically got a switch up in here that this market was going negative. Sometimes this is the way it goes. I was looking for that little bit of a rally towards the short. Would have been a sweet trade. Very, very sweet. If you're in short dollar, yeah, I would see rallies as being still met by sell demand at this point. And I think we're going underneath parity into the 98s. And we'll cover dollar more on our weekend video as we see how this week closes. Because at the moment, it looks absolutely horrendous coming off a doji and a rejection candle. So I think we were in a new trend here for the dollar, and it is currently down, which also bodes okay for gold, which we'll take a look at now on the charts. So we had this one at the start of the video, and if we move over to it, you'll see it broke through our supply area, which we kind of talked about a lot. We've come back to the heavily traded area, which is all of this structure over here. And I could see gold finding some initial weakness after its exuberance. Maybe it pulls back a little bit, then we see a rally through. This is a first positive sign. If we get the second positive sign, which is big money flowing back in, which I'll report on the weekend if we do see it, yeah, I think that's going to be a big one for gold. And I would have a guess, and it's a guess at this stage, that they have started to rotate into it. The volume was right, the movement looks right, and of course the charts look decent. Let's move over to oil. That was a breakout that we talked about recently. We had a suspicion this would occur. Looks like oil is probably going to go towards our most traded zone 1, which is around 77.60 for a barrel. It's pretty strong. I don't know if it needs to pull back, but if it does pull back, look around this doji in here as being a zone for day traders. I think day traders will be watching that area, and that's approximately around 73, kind of 40-ish per barrel. That's the US oil per barrel. Energy stocks have been breaking out as well. You can see here, nice momentum going through on those. And for now, that is expected. What I would say, though, about energy is it actually doesn't like yields going down. So if yields do continue to go down, let's say the 2-year after PPI, if it does have a resurgence, I'm not thinking it's that long. I did hear that PIMCO and a few other major firms were actually suggesting short-term trades on energy about a week ago. So it looks like, well, they're pushing it through at this stage. Tesla, well, it was disappointing. It gapped up and then really couldn't hold most of it for the day. Is it still in this kind of range of a potential island reversal? Yes. Island reversal is, of course, only around 50+%. It's like 56% or something as a signal itself, because it's only a candle pattern. But we are above. We're currently in an upward trend. If you're in Tesla, I wouldn't be scared yet. And you're probably angling still towards the 300. But yeah, it's hovering at these highs. More to look at once we see some further confirmation. What was looking good was utilities, and there were a few utilities getting some big trade on them. I'll have a report if you're ever interested, free 7-day trial, and links are down below for our private community. I do a special macro run up where I look at a couple of stocks. This week we checked out Starbucks and a few others, which have been doing pretty well. And of course, utilities, there are a couple of stocks that have done very nicely in terms of volumes and some other things over the last 24 hours. Now, it's a sector that most people never look at. Why would you? It's boring, but everything is about risk-reward ratio. It's not really about necessarily just pure percentages. If you want pure percentages, of course, a Rivian or a Neo or any hyper stock or anything that's kind of YOLO would be better. But I like risk-reward. You know, if I can make a 3-to-1 or a 4-to-1 style ratio trade where you risk 100, you make 400, I always think that's good if you can replicate it. And of course, the key here is always patience and reaction, not necessarily prediction itself. You're looking for the signs, the evidence. When you then see the trigger, you want to jump that momentum as much as you can. Utilities, yep, good day, good weekly at this stage. And we'll find out whether it can get above, because, of course, a weekly close above here would be a big deal for utilities. And it's in line with some of the things we thought might happen. For Australians out there, I put in a little extra in here. We saw a nice island reversal on BHP. I just want to remind people that BHP in particular is one of those stocks, iron ore stock for anyone that doesn't know, that does this a lot. And a few members of the community found this outside of the Bollinger. So certainly a good 2-day kind of run here for multiple percentage points on that one. Let's move over to the German market. Now, this is an interesting point because we suspected there's a Wyckoff. So what's happened? It's rallied up. Okay, good. Will we actually see shorters come through, though? At this stage, nothing has happened. I think what I'd be doing is breaking down really small time frames, such as the 15-minute, 1 hour, that type of thing, and actually waiting for a trend change. I had it drawn up for the private community yesterday as this zone here. Should we see that get taken? Nothing happened, no reaction. Therefore, we're not going to predict anything at this point. Yeah, we've got some nice lows starting to come in, and what you're looking for is really probably a market to go back below this 15.9. And at this stage, it's a rocket ship, so selling into it, it's going to be a bit difficult. It's in the right area, but there's no trigger. So, of course, for German market, that's where it's at. The Australian market remains quite strong. And that market, it's basically bullish at this stage. And we talked about that change that we saw before the CPI. I still think there's a lot of leaks here, or at least a lot of bets going on. The Australian market went and started to go bullish. The S&P 500 started to show even signs of potential turn. It was already up at those highs, breaching all the zones that would usually be bullish, and you'd be looking more for pullbacks. And yeah, I mean, it was all happening ahead of time on that CPI number. When we look at the Dow, it's still in supply. It's been pretty weak. Could still be a triple top. Could be accumulation into a breakout. If the Dow does break out, expect it to move to around 35,300-ish, 250 to 300-ish. And we'll be watching that closely. NASDAQ, new high. It took the previous highs, which are here and here. So that's the 1 and the 2. It took it, it sold off, and then it rallied straight back up. Not really looking at the NASDAQ so much from an analysis perspective. I do think we're better off looking at the S&P. And you can see there's gaps everywhere now. It's a gap fest. But we got so close to 4,500. I think the real market hit 44.87. And we've got these huge gaps where bulls could easily just go towards the fill here and push up a little higher. I do see a lot of people mentioning similar levels to what we've talked about. I don't know where they're getting their levels from, but yeah, we've discussed 45.30 for a long time. Heaps of people seeming to think 45.30, 45.40 are the key zones. The futures market here, you can see, is just continuing to ramp at this stage. And at the moment, all we've got is daily 20 moving average. We ended up getting daily 20 moving average, and then it just went boom. And it's the same thing as Apple. If you load up an Apple chart, it just keeps finding the 20 moving average for a while now and bouncing off it. So if you actually load 20 moving average here, you'll notice that was the 20. It bounced off. No signs of weakness through any of these just yet, but we'll be watching. And of course, for the US 500 at this stage, it's more of a, do we get a pullback, fill the gap, potentially then find buyers? I think at this stage, the trend is still up until we get something that proves us otherwise. And we haven't seen those defensive move sectors. I'm really looking for that. We've got so many other reasons, including the macro, to say, oh, the market should be selling off. It should be selling off. But we just don't have any Wall Street movements into the general defensive sectors. And it was, it's coming up maybe in a week or so. So stay tuned, because that's when, if these markets are going to sell, a week or 2 weeks is when it usually starts to happen. Let's move over to Bitcoin. It was the most boring market of them all. Absolutely stuck in the middle of nowhere land. What can I say? No trigger here for Bitcoin. We keep following it. We're obviously watching it. I am bullish on it in the future. But yeah, from this standpoint, Bitcoin, US dollar, it's just floating around in the middle of nowhere land, and we'll continue to follow it as much as we can. Do remember, you've got PPI coming out, I believe, 8:30 a.m. before New York Open. And also, if you're interested, go and check out the special offers down below for Tiger Brokers, of course. Help us out, help support the community. And as always, I want to say a big thank you for each one of you that watches the show, likes the video, and of course, I hope you enjoyed the content and find some value from it. Subscribe, and we'll see you in the next video. Bye for now.